and welcome to this week's Market Outlook webinar. If you're watching the recorded version of this, it was held on Wednesday, the 1st of March at 12:30 in the afternoon. So this is a webinar that I do every week with Aondo, and it's a look back the last couple of days, what markets have been moving, and a look ahead to where the opportunities might be in the days ahead. Let's just put the risk warning up while I'm talking away. It's been a bit of an odd week. We heard from President Trump late yesterday, I think it was midnight UK time, when he spoke to Congress for the first time. And I think there was an element of market sort of marking time ahead of that, waiting to hear what he was going to say. It seems to have gone down quite well. I think it was quite a measured, balanced speech by the sounds of it. No surprises in there. And the market reaction has been really positive. You know, we've seen stock markets again off to the races, but we'll have a look at those, the DAX, FTSE, the Dow and the S&P. And I think we'll go on a bit of a diversion this week. We'll talk about maybe ways of trading markets like that, because I think it can be difficult. It's difficult for me anyway. When a market just goes vertical, I find it quite hard to get in. So we'll talk a little bit about that. We've also seen quite a run in the US dollar over the last 24 hours. So that's there's some interesting things going on there. So we'll take a look at some of those markets and see where the opportunities are. We've seen the pound under a bit of pressure, and I think that is a combination of US dollar strength and concerns about the Brexit Article 50 thing going through the Lords. But let's take a look and we'll see what's going on. So let's start off. So what I'm looking at here, this is Aondo's trading platform, Trade Hub. Let's start off with the euro dollar first of all, just to get a feel for how the dollar has been performing. So there's the moves really. So if we look at well, that was yesterday. So the euro was trading around about the 106 level, 106.30 against the US dollar. We've had this speech and we've seen quite a run in the US dollar over the last 20 hours or so, and it's pushed it down. It's pushed the euro down about 100 points, and it's a similar sort of thing for other markets. If let's take a quick look at dollar Canada. We've seen the US dollar there have quite the run, a couple of hundred points over the last day or so. So we are seeing US dollar strength, and I think this was something I've talked about a bit. I think this could well be a year for maybe some dollar strength, or in the weeks ahead anyway. Let's just take a look back, because I think with the likes of the euro, it has pushed it down, or it's beginning to push it down to levels that could make it interesting. So I'm wondering if in the short term for some markets this dollar strength ends up being something of an overreaction. Let me show you what I'm talking about. So this is a daily chart for the euro against the dollar, and we saw those lows last year. We saw something of a recovery for the euro against the dollar, but it's this sort of level here that I'm going to be watching. So let me just flip this over to an hourly chart. Here we go. So if we zoom this out, so we had this decline, and sort of quite pretty major decline at the beginning of Feb, from the 108 area down to 105. So we saw a 300-point slide. The market rallied, then dumped again back towards 105, and it managed to rally 120 points off this level. So I'm just wondering, down at these levels, if we take it out a bit further, if we look at maybe some of these historical lows from earlier in the year, sort of back here, Jan 11th, sort of 104.50, and then more recently, a week ago, at 104.90. So I think this whole 104.50, 10500 area could be an interesting one for the euro. So I wouldn't be in a hurry necessarily to be a buyer just yet, but I do think it's going to be an interesting one to keep an eye on over the next couple of days to see how the market performs if it slips down to here. So if we saw a bit of strength coming in, it could be maybe a half decent buying opportunity, because this zone has been reasonably good support over the last 6 weeks. Of course, on Friday we've got the payrolls, I think, haven't we? The non-farm payrolls, US unemployment figures out at 1:30 UK time. At least I think it's Friday. Sometimes they slip it a week after February. But again, normally we'd expect to see plenty of volatility off the back of that. So I think the currency markets, not till next week, thanks Bill. So it's not this Friday, it's a week on Friday. So or maybe we'll just have a bit of a quiet week after this though. Let's see how it performs, this US dollar. I think that is definitely the market to watch, the currencies, and euro dollar in particular, to see how we are down at these levels. If we look at pound against the dollar, it's been pretty boring, I think, for the last few weeks, pound against the dollar, but not so much this morning. So we'd seen for all of February, really, the pound had been sort of just whacking about in this sideways range. But I think with the combination of this dollar strength that we're seeing, and also concerns about the Article 50 thing going through the Lords, it's put a bit of pressure on the pound here, and it is weak. We've broken some big support. 123.50 was big support. We've slipped below that. We're a good 150 points below yesterday's high, so that is quite a slide in the pound against the dollar. I think the interesting level to watch here, if we do see a more sort of pronounced sell-off, are going to be these late January lows. This was the move. We had that speculation over the weekend. Theresa May was the Prime Minister was giving a speech the following week, and there was speculation over the weekend that she was going to go for a really hard Brexit. So we saw, I think it gapped lower about 100, 150 points on the Sunday night Asian trades, down to sort of the 120 mark. But it has been quite a strong line in the sand. So I think if we did see more of a pronounced sell-off from here, down to this sort of area, you would expect the strength to come back in. Personally, it does seem to overreact to political concerns, or it has, I think, in recent months anyway. So maybe what we're seeing now is an overreaction. So I think for the shorter term trader, maybe the first levels you're going to be watching are those Jan lows ahead of sort of 122.50. So we're only 50, 60 points away from that now, and it's moved 50, 60 points in the last 8 hours or so. So I think the pound is going to be an interesting one. So for those who fancy a bit of maybe bottom picking, 122.50 I think is the level to watch. If we go through there, I think that there is a real risk of those old lows being tested. But I would expect anyway, it's to be quite the line in the sand down here. Let's see what happens. But I think there is a tendency at the moment for it to move a lot on a political event and then just sort of die a death for a few weeks, but I think 122.50 is the first level to watch, and then euro dollar, those lows just below where we are now. Now, dollar Canada is an interesting one. The dollar against the Canadian dollar. I must admit I've been wrong-footed by this the last couple of days. I didn't think we'd see this sort of strength, but this is one that we look at now and again because we do see, this is a daily chart, we see some really good trends over the years in the dollar against the Canadian dollar. So I think it's an interesting market to trade, and if it's one you're not watching, it's definitely worth a look, with a view to maybe running trades over a few days to try and catch some of these trends. But it comes back to one of my favorite topics, is of course the importance of big levels, the importance of previous highs and lows. So if I just plonk it out, if I could draw it straight, it might help. If I look at these levels from September last year, down there we go, ahead of 130. So we had seen something of a recovery in the second half of last year for the dollar against the Canadian dollar, pushed out to 136, then it sold off. But look where it stopped again. Again, it stopped and it's turned around and it's rallied off those old lows. It did spend, a good month faffing around that 130 level, but we've seen a strong bounce now. So for me, that trend is still intact, even though if we drew a trend line on there, let me draw what do I want? That's the line I want. If we drew a trend line from these lows in May last year through there-ish, there we go. So our trend line looks something like that. Now, the fact it broke the trend line, for me, that doesn't make it an immediate sell because we still have these important supports left. And for me, those important supports have held. So my target would be a run back up to 136. It's currently trading above 133. Again, I wouldn't necessarily want to be a buyer here. But if we do get a bit of weakness, a bit of this dollar rally starting to cool off and a pullback into the zone from the end of last week, it looks like something of a buying opportunity. But it does, I think, highlight, how effective just this simple idea, previous highs and lows, can be if we're looking for sort of low risk but high potential profit opportunities. So I think dollar Canada is an interesting one there. We'll look at two more currencies, then we'll get into the indices and talk a bit about trading strategies. Let's look at dollar yen. I was trying to buy this one, but again, the surge has beaten me to it. So if you look at, is it the dailies we start with on dollar yen, or maybe something a bit more short term? Let me have a look. 4-hour chart. So maybe the dailies will give us the better picture. So dollar yen, we'd had this fantastic run up last year after making this base all the way through the summer, around about the 9900 level, and then bang, it just starts to take off like a rocket and move 1600 points in the space of not more than a couple of months. And the market had cooled off a bit since then, but the levels I was watching, and it turned around a little bit too quickly. Again, for me, it's constructing a few different things. So we had, our downtrend, our little correction off the highs, looking something like that. So the market managed to break it. So the major trend is still up. We had our horizontal high-low there with the previous low there, and the market came down, held, and bang, up it's gone. So for me, this is the perfect sort of setup, and I'll talk about this when we start to look at indices, but from a much shorter term point of view. I have to say I missed this one as well. I've been really not on top of things in the last week. I missed a couple of these sort of nice, good risk-reward trades. But when the market had come down, we had our previous lows, 111.59. The market was faffed around that 112 level a couple of times. So we could have had, maybe, I don't know what, stop loss, maybe entered it somewhere here, stop loss 60, 70 points away, and the market's run up 180 points. So for me, if we do come back and have a look at those 112 levels, it looks like a buying opportunity. But it's interesting that, the dollar Canada, dollar yen, we're seeing a similar sort of thing. The market's come back to support and the dollar's rallied. So maybe, even though it might be a little bit overdone over the last 24 hours, maybe it points to more US dollar strength to come, particularly if President Trump puts a bit more meat on the bones. But it's interesting that these big supports have held. So I think that the likes of euro dollar, dollar yen, the dollar Canadian dollar could well be the markets to watch over the next couple of days and see if we get a bit of a cooling off after this surge and a second bite of the cherry. Euro sterling is it's still, I think it's still bullish, euro sterling, if we take the dollar out of the equation. So for me, the argument on euro sterling is the same as it's been for weeks, to be honest. We had the surge after the referendum, so euro strength faffs about a bit and then moves up through 91 in October last year, has come back, but once again, it's the old story for me of these old, these previous old levels have held really well. 83 to 84 has been good support for euro sterling. We saw it drift down to just above 84 in the last couple of weeks, and the markets bounced back. So I'd be looking for the euro to push back up, first of all, to these highs, about 88.50, and if we break these, then maybe back up to test those highs from October last year. So it's still bullish. It's just a bit, I think maybe just a little bit choppy. So I think probably the action and the interesting stuff is in the ones with a dollar in over the next couple of days. So the pound against dollar on the politics, euro dollar, because that's a big support just below from where we are now, and dollar yen and dollar Canadian dollar because of the strength that we've seen. Okay, so it's a funny old time, sort of a quiet couple of days, and markets off to the races. It's a similar sort of story, of course, with stock markets. Let's start off by looking at the Dow, if I can find it. Here we go. Wall Street rolling. It's incredible. If you think back to how much of a faff it was and how everyone was waiting to see if the Dow could break 20,000, and you can see it here, just sort of, if we zoom in a little bit, just messing about all the way through December ahead of the 20,000 level. So it took weeks and weeks really to finally decisively break 20,000. And so when it did in February, so about 4 weeks ago, we're now a whisker away from 21,000. So the market is currently 29.27. You can see it there. We've got that overnight strength, out of hours strength. Let's have a just quick look at the short-term chart. There we go. So the close yesterday was what was the day yesterday? February 28th. Okay, so it's moved about 100 points overnight, slightly more than 100 points overnight, and we're nearly at 21,000. So the analysis for stock markets, you can't stand in front of that trend. I think in Feb, the indices, the S&P was up, I think, 3.5% in Feb, and I'm sure plenty of fingers will have been burned trying to catch the top, selling short into this, because it's human nature. I know from my experience from working in the betting in the CFD industry in the past, if you see a strong trend on a chart, you can almost guarantee that the majority of clients trading that will be positioned against the trend. So if the market's going vertical, they'll be short. If the market's dropping like a stone, they'll all be trying to catch the falling knife at the bottom. So in a market like this, what have we got to do? We've got to be a buyer, but it's hard because you think, oh, if only I bought it just 2 weeks ago, it was 1,000 points cheaper than it is now. And I think this again is where this idea of these big levels come into play. I think, and it's one of these things where I think you need to be, if you want to try and catch maybe moves like this, you do need to be something of a screen watcher, but something that does work well, I think, in these strong markets, not just in stock markets, is the idea of the previous day's high and low. And you'll often see, when we look at the S&P and the Dow, if the market sells off, starts the day selling off, it will very often stop ahead of the previous day's low, because there is this queue of people who've sat there watching the market go up, maybe haven't got on, so just looking for an opportunity to get in. So I think if you're short-term trading it, if we do see the market sell off to the previous day's lows, you'll see these levels held. I mean, here's an example here. Here's Feb the 28th. That's yesterday. So it was a bit of a funny day yesterday, but the market sells off a bit. This is the Dow from 2840 down to 2780, and then starts to turn around. And sort of how relevant was this area? Well, it was pretty near the low of the previous day. So there's our low. There we go, from 2:40 UK time at 27.71. So that would have been the trade. I did do a couple of trades on the DAX this week, sort of using the previous day's low. I've not traded the US markets, but you can see how well that worked. Now, for today, I mean, yesterday's low is here, 27.80. So if the market decides to tank 140 points today from where it is now, I think again it's another interesting setup. But that for me is one way of trying to just buy into these absolute rocket-powered trends. Look for the pullback, and the first place I want to set my stop is the other side of the previous day's low. And it works. It doesn't work all the time, like anything, but I think it works enough of the time to be a strategy. What's also been interesting in these US markets in recent weeks is that quite often the low is set in the first half hour. You'll see it's almost as, when the opening bell goes, the official open, 2:30 UK time, the market's just off to the races. So very often I think that first half hour is an interesting one. If you're looking at this stuff in the evening, maybe you've been at work all day, you come back in 6, 7 in the evening. If the market starts moving back to the lows of the current day, the sort of official since 2:30 lows, see how the market reacts, because it could be an opportunity to buy in. But it is phenomenal, the run that we've seen in stock markets. And of course we can all sit there and say, well, it's not going to go on forever. Well, no, it's not going to go on forever, but we probably would have been saying that a couple of weeks ago when the market was 800 points lower than it is now. The approach in markets like this, I think it's really expensive to try and sell short. If you can't bring yourself to buy, to just go and look at something else, because you don't want to be trying to call a top in these just ridiculously strong markets. So there's the Dow. Next target for the Dow, just pluck a figure out of the air. 21,000 is clearly going to be the one that's in focus. Let's just try and put this trend into some sort of perspective. Let's see, if we do start seeing some deeper sell-offs, what do we have to worry about? So what we're looking at now is a 4-hour chart. So this is the presidential lows. Those again, an absolutely incredible overnight moves that we saw from the presidential election. So let's plonk our lines on. There we go. So our trend off those overnight lows, looks something like that. So if we saw the Dow start to slip below 20,500, okay, then maybe that somewhat peculiar trend is being threatened. So I'd say maybe that's the level to watch. Personally, if we saw it slip back towards 20,500, I'd be looking for the reversal and be looking to buy in. But maybe that's for the doom mongers out there, if we want to see this market fall off a cliff, I reckon 20,500 is the first level to keep an eye on. Let's just have a look at the other markets as well. I mean, clearly, if we look at the S&P 500, I think it's a great market to trade the S&P. There we go. Well, that's obviously at all-time highs as well. If we flip that out to the dailies, there's our S&P move. since the election. So what was the election low? 2052. We're now at 2377. So that's what, 15% move off the election lows. Even if we'd have bought the day before the election, of course, this is all Harry hindsight trading, we'd still be up about 220 points. So a good 10% in, what's that, for about 3.5 months. So it is quite an incredible move. And the same sort of thing for the S&P as the Dow. You could argue the S&P is a smoother market. It's made up of 500 shares. It is traded by the professionals. The Dow is the one we all know, but the Dow is only 30 shares. So the S&P, much broader brush of markets. Interestingly though, actually the S&P yesterday did very briefly dibble below the previous day's low. So it's a strategy that wouldn't have worked yesterday on the S&P, but did work on the Dow. So again, levels going into today. The market's currently at 2377. If we did see a sell pushback towards those lows from yesterday, the low 2360s, then maybe it looks like a buying opportunity. But it's the problem I have with buying up here is where does your stop go? And the closest I would want my stop is down here. So a stop loss, 17, 18, 19 points away. It's like 200 Dow points away from where we are now. So I have a real problem buying when they've moved as much as they have. So I'm always trying to buy a pullback. But I think they're tricky markets to trade at the moment. Clearly, if you're in a trade and you run a trade for a few days, happy days. You just wake up every day and it's ka-ching in your account. But when they break away like this, personally, I want to try and buy the pullback. Let's look at the European markets. German 30, the DAX was, there we go, flirting with 12,000 just before I started. Let's take a step back on the dailies. The DAX isn't quite at all-time highs. So that's the move in the DAX. So again, since the US election, 9,900-ish, 980, we're up, what, 2,000 points? Is that really 2,000 points? It is 2,000 points, isn't it? 10.9, 11.9. Yeah, so 2,000 points on the DAX since those overnight US presidential lows. The big level to watch on the DAX is the all-time high from up here. Somewhere, there we go, 12,400-ish. So we're about 400 points away from that. And I think, again, for the DAX, it's a question, I think for the more medium-term trader, which I'm definitely a fan of, looking at hourlies and stuff like that, you can see how well, just to bang the same drum again, how well this idea, previous highs and lows works, where this was middle of Feb, so the market sells off to 11,690, runs up to 12,000, so that's what, a 300-point move, comes back and stops within about 20 or 30 points of that old low before taking off again. And I can't stress enough how much a fan I am of this, because in my experience, and I know I did it for years, too many people end up placing what are in effect random stop losses. So they think, I think the Dow is going to go up, I'm going to buy it. I'll put a stop loss 50 points away. It's completely meaningless, particularly when we have a market that's moved more than 100 points in just overnight trading. So I'm a big fan of trying to find obvious big levels on charts to try and put my stop loss. I suppose if you were bearish, if you thought, well, this move in stock markets is ridiculous, completely overdone, then this is the place to go short the DAX, because your risk reward is very attractive up here. So you're short at 11,999. The recent high from the end of Feb was 12,032. So let's say you put a stop at 12,050. So you've got 51 points risk. And if the market goes all the way back down to here, you've got 300 points rewards. It's not the most ridiculous trade in the world, actually, is it? I mean, markets have been quite overextended. You are selling into a bit of a rocket trend, but I'll write that down. I might do that one later if we see a bit of weakness. Maybe that'll be an interesting one to come back to next week. Short the DAX at 11,999, 60-odd point stop, and then let's see if it goes crashing back to the lows. But clearly, these trends are incredibly strong, and you'd be standing in front of something of a runaway train when it comes to these markets. But the big level for the DAX to watch out for are those all-time highs up at 12,400. The FTSE, actually, the FTSE's maybe, if you really wanted to be short stock markets, the FTSE's maybe the one that makes the more sense if you're going to go short into these trends. We'd had this run earlier in the year in the FTSE where it was making, I think, was it fresh all-time highs for 11 days on the trot or something ridiculous, and the market sold off a bit back to here, and we're back up again. So the FTSE is interesting that if we flip it over to an hourly chart, it has been lagging a bit in recent weeks, sorry. But it's really interesting up here because we're back up on the FTSE within a whisker, 7 points. Oh God, no, it's not 7 points because I haven't drawn it properly. On that, what's that absolute level? Is it out of hours? Okay, it's an out of hours level. I can't even see what it is. Okay, it's about what, 73.70-ish is that previous all-time high on the FTSE. So we're about 20-25 points away from it. So it'll be interesting to see how it reacts up here. But again, if you were something of a perma bear on stock markets, then it's in terms of risk reward, it's an interesting trade up here if you think it's going to run out of steam. But once again, if you saw the FTSE, break through 73.70, 73.80, it's another classic chart breakout. And if we have a look on the dailies, we'll see it a bit better. And it would traditionally suggest the same way this breakout back here through these old highs, off we go. If we broke through here, you'd expect another leg higher, maybe as high as, I don't know, 7,500. Doesn't seem like a ridiculous target. I do think, even though I clearly am a fan of trends, I do think it is quite incredible, the performance of stock markets over the last 3 months. But they're still going up. You don't want to argue with those sort of trends. So that's it. Stock market, same old story. Let's take a look at commodities. Let's do oil first because that's been really boring. There we go. So that's US crude oil. That recovery from last year still intact off those $26 lows, but it's just been a boring year. We're at the top of the range now. Incredibly tight year in terms of range for oil. It's almost been like just a $5 range for oil this year. And there were some days last year when it would do that in less than a week. So we're seeing a really tight range for the price of oil. If we flip it over to an hourlies, there we go. We can see it. So we go up here towards 55. The sellers come back in. We go back down sort of towards the low 50s, 51. The buyers come back in. It's just a bit of a boring market, really well. So we really need a decisive move. Personally, I still stick to what I was saying at the beginning of the year. I think we'll see it in the mid-60s this year, the price of oil. It's just not done very much exciting in the first couple of months. And then to end on another good trend, gold. So just to recap, the reason I think gold is an interesting one for sort of short, medium, and long-term traders and investors is based off the moves we saw last year. Off those highs, this is going back to 2008. This chart now. But off those highs, those 2011 highs, we'd had years of gold just declining year in, year out, moving to a new low, a new low, a new low, sort of relative to this downtrend. But last year we did see some strength. The market pushed up and it sold off, but it hasn't threatened those old lows. And in previous years, almost every year it's taken out the low from the year before. So I think that's a positive sign. That suggests that maybe the moves we saw last year with the beginning of a change in sentiment for the price of gold. We've had this trend in place now since just before Christmas. Looks like that on the daily chart. We'll flip it over to the hourlies at the moment. So for me, my view on gold would still be to look to be a buyer on dips. And if I'm assuming this recovery is going to continue, then my first target would be for a move back above 1300, so back up to these old highs October, November last year. And we'll see it on the hourlies. I maybe wouldn't be a buyer just yet, but I'll be watching over the next couple of days. It's been declining for the last 3 days, but there's our maybe our more accelerated trend, our shorter term trends. Oh, come on. I need to get a new mouse. There we go, perfect. So it's right on the trend line. It's nudging through that trend line, but again, for me, just because it's nudging through the trend line doesn't necessarily mean this particular leg of the trend is going to reverse completely. So I'd be looking at obvious levels, 12.25, just ahead of 12.25 support, and then this 12.18 support. So I think if we saw it dip back to the low 12.30s, it looks like a buying opportunity with a stop somewhere the other side of one of these levels, and looking for it to turn its way back up to here, break out, and move higher. So, but clearly it's been put under a bit of pressure in recent days because of that US dollar strength. So that's it. It's been odd, you know. It's been a quiet time. Then the last 24 hours, it's all gone a bit crazy. But to sum things up, stock markets still incredibly strong. You know, you really can't argue with the sort of strength that we're seeing in stock markets. Dollar really strong last 24 hours, and the trend, oil still a bit boring, but the trend in gold is still up, and this weakness, for now at least, still looks like something of a buying opportunity. I've got a question that's come in about social trading, because I do sort of social copy trading webinars with Aondo. I did one last night, and I've been blogging about a real account, so I thought to maybe try and explain it a bit better, I'd do a real account and make it public. So someone's just asked, how's the real account getting on? Well, if you go to my website, you go to tradeafter.com, you can read the blog. But here's a snapshot at the moment. So I put 2,000 quid in beginning of Feb. So at the moment, 2,000, so 15 quid realised profit, 15 quid open profit. So that, I'm quite happy with that. That's like 1.5% for the month in Feb with a very conservative approach. But to find out a bit more about social trading, copy trading, all that sort of stuff, if you have a look on my website, the details are there. But for this week's market outlook, we'll wrap things up. You know, it's an interesting time. Maybe this US dollar strength has been a bit overextended. There are big levels to watch: euro dollar, pound dollar, in the next few days. And we'll come back next week and do it all again next Wednesday. But these stock markets continue to defy gravity. So it's going to be an interesting few days for them to see if they can hang on to the games. Right, done. Thanks very much for coming along. I hope you have a good week and you make some money. Any questions, drop me an email. My email address is david@tradeafter.com. You can follow me on Twitter for interesting charts and stuff. I've not done much the last week, but I'll get back into it the next few days. And on Twitter, I'm @JonesandMarkets. But we'll wrap things up there and hopefully see you all again next Wednesday lunchtime. Have a good week.